Good evening, everyone. This is Wayne, and this is the video version of the trade report for Thursday, March 22nd, 2018. Well, the markets have made a decision, and that decision is sell. Stay tuned to find out more. Greetings, everyone. Thank you very much for spending a part of your evening with me as I go over the events that occurred today in the financial markets. And boy, there were a lot of events that occurred today in the financial markets. First of all, let's take a real quick look at the S&P futures and see what is going on, because first of all, a lot did go on today in the S&P futures and in the Dow and in the Nasdaq and in the Russell and in the bond market and in crude oil. No sector was untouched today. This market was absolutely ready to go, and it went. So you can see where we had a little bit of a push to the upside on the open today, but it quickly devolved into a rather significant bout of selling. Then the president began speaking and declaring that tariffs would be assessed against China. And that initially brought a little bit of buying in. And then we got a little bit of selling and then a little bit more buying. And it looked like the market might actually get some traction to the upside. However, it was all for naught. And we just collapsed into the close. And you can see in the extended session, we are heading lower. Now, let's take a little closer look at this on a daily chart. And we can get a much better picture of what this not only looks like, but where support and resistance is. And I do want to show you the Dow chart in addition to the S&P futures chart, because the Dow is the chart that we've kind of been looking at for chart patterns and support and resistance levels and the like. So here you can see that, well, first of all, let me just make a quick distinction. This little red candle here is actually the extended session that's trading right now. So we're not going to look at that. We're going to take that into consideration, of course, because that is going lower. And it looks like it's heading down toward the 1272, which is a Fibonacci target. And that Fibonacci target is drawn from this level here, the March 2nd low to the March 20th. No, today's March 23rd. Let me see what the date is here. To the March 13th high. And so the 1272 is a target for price. It gives price something to shoot for. And that's 2603.48. And that represents about a 34-point move from where we are, which is about 340 Dow points. I think we're going to make that easily tomorrow. In fact, I think we could even make it close to the 1618. Now, the 1618 is a secondary target, and that's at 2548. Now, again, we're at 2637, so that's about a 90-point move. Sorry, that's 110. No, that's a 90-point move. I was right the first time. That's a 90-point move to the downside in the S&P futures from where we are right now. And that equates to approximately a 900-point Dow move. Now, the Dow closed down 725 points today. It got absolutely taken to the woodshed today, as did all the indexes. The S&P was down 68 points. The Nasdaq got taken to the woodshed, and even further, it was down 178 points. And then the Russell was down 35.5 points. So, things got really shaken up today. Now, because fear is a much stronger emotion than greed, in all likelihood, we will have continuation tomorrow. Sentiment and momentum, when there's fear present in the financial markets, drives prices lower. Now, I'm going to say something, and I'm not saying it for the purposes of being dramatic or being over the top or anything else. It's just coming as a result of my experience in the financial markets. But today's price action reminded me of the 2008 financial crisis. I said it, I mean it. I've looked at this, I've kind of gone through the day's events, and I have no other way of characterizing today's price action but to say it just was a stark reminder that this market is a powerful, powerful and dynamic beast that can, just present its power and its dynamism when it's it doesn't even have to be dared when it's time to do so. So we have the S&P futures, and then of course we have the NASDAQ that rolled over and is continuing moving lower. And then we have the Dow, which is continuing to move lower. And we have the Russell, which is moving even lower. So all of the indexes are kind of following suit into the close, going lower, in the extended session. But let's take a look at the Dow Jones Industrial Average here real quick. Let me make sure that I've got that selected. And we'll take a look at the Dow Jones chart. And basically what I want to do is just show you kind of as a follow-up to yesterday's video where I said that this was kind of a pseudo harami, a pseudo bearish harami, but technically it was actually a bearish hammer. And those two configurations oftentimes do resolve to the downside because they're the first candle of a pattern that usually portends downside movement. Well, today we got downside movement in spades. So if we take a look at the February low, which is indicated by this red line right here, we can see that the 200-day simple moving average rises up to meet that February low. And I do believe that we are going to hit that February low price level tomorrow. It's one of those, I'm kind of feeling it in my bones. It's part of my intuition. It's the intuitive trader in me. And intuition isn't psychic awareness. You don't want to mix that up. It's basically, true intuition is how your mind processes what it sees and what it experiences based on previous experiences and your accumulated knowledge base that resides not only consciously but subconsciously. And so when there's something that becomes familiar and there's a sensation and a feeling around it, and you can identify with it based on something previous in your world that just kind of reminds you, that's the intuition dynamic coming into play. And today, boy, 2008 was playing out all over again for me. So tomorrow, based on that, the fear, the sentiment, the momentum, and what's happening right now, we're getting sold in the extended session. I think we will revisit those February lows. And the last component of this equation of going lower is the fact that tomorrow's Friday. I don't think traders want to go into the weekend long. I think that they are looking to having a clean slate, being in cash. I'm in mostly cash and have been for a long time. As you know, I had a few positions and I still do, but they're small and they're kind of riding out the storm, but my hedges are doing amazing. So I'm pretty pleased with that. So, we've got a market that's kind of teetering on the edge here. So we will see what happens tomorrow. We will see if the market decides that it's just time to complete the technical pattern of revisiting the February lows tomorrow. And, we'll just accept whatever the market gives us. The last thing I want to show you is the VIX. Volatility is, as you know, a huge part of how I evaluate the market. It's a huge component of how I consider trades and how I set up trades. And I also trade volatility itself because there are instruments that are tradable that are based on the VIX, on volatility. Well, you can see how volatility went basically straight up and stayed straight up, which is telling us that this market is just primed to go even higher. Now, there are a few levels here that may present resistance, but my thinking is we're going all the way up to 29.78 tomorrow in the VIX, which is about a 25% move from where we are now. We moved about 30% from where we closed yesterday. That's what this bar represents, is a 30% move higher in the VIX. But tomorrow, I think we're going to do another one of the same. It just has all of the earmarks for doing that. Now, the financial markets are a trickster as well. Just because something looks like a duck and quacks like a duck doesn't mean it's a duck in the financial markets. so it may or may not happen. But at this point, my thesis and the probabilities as they're presenting themselves to me are telling me we're going lower tomorrow, which means the VIX is going higher. So there are a lot of things that present in the financial markets when volatility is high that are associated with opportunities. And I will be looking at those. And I may or may not decide to trade and even go into the weekend with a volatility related trade that I take. There are too many factors and variables for me to list that would give you any sense of what would have to be in alignment for me to actually enter a trade in an environment like this. Someday, well, actually, I do go over this type of thing with my coaching clients. We get into the nitty gritty details of trades. You have to. When you're teaching somebody how to trade and you're learning who they are and how they can understand themselves better and apply that knowledge to their trading, you must get granular. You must get detailed. You must look at every element associated with everything when it comes to entering a trade. That's the only way that you can devise a high probability entry and an exit strategy and still be able to give yourself enough flexibility to let the market move in a way that still gives you the necessary parameters for the trade to work, even if it looks like the market isn't supporting your original trade thesis. So that's a lot of verbiage to just say everybody's different, every trade is different, and every trade and every trader needs to be assessed and evaluated separately and individually in order to bring about the best possible scenario with the highest potential probability for success when it comes to entering a trade. So at any rate, that is the VIX. And so we'll come back to the live extended session. And this market just wants to go lower, folks. It's continuing to put in lower prints. We're at 2635 now. I mean, in all seriousness, we could hit 2600 overnight. That would not be out of the realm of what would be considered a reasonable move for a market that's in this kind of a downtrend with this kind of sentiment and momentum behind it. So at any rate, I did make recommendations back in February. I told people to get to cash, and I hope they are still in cash, because even though we've had a little bit of a move higher, the clue to stay in cash was volatility. Volatility never really completely relaxed. We had a couple of days when it looked like it wanted to. And you probably remember those videos when I said, well, the market's giving us the first inclinations of a clue that looks like it wants to get back on track. Looks like it's trying to find itself, trying to establish a modicum of traction so that it can begin doing what it does best, and that's to go higher. Well, that is now totally out the window as of today. We are in a very, very, very different place now. So at any rate, enough said. And tomorrow, Friday, March 23rd, will be quite a day. The markets will be very active, and we'll see how it all plays out. But until then, good night and good trading.